Hello and welcome. My name's Ryan Johnson, and this is the Saltcast. Today, I welcome Paul. Paul,
Hey
welcome.
Ryan, how are you, buddy?
I am really good. You know, the weather's holding up. I think our most common introductory conversation is the weather.
It's true. We seem to talk a lot about the weather because either it's in St. George anyway, where I am, it's either really hot because it's the summer, or it's just glorious. It's perfect. Sunny blue skies. It's rare that we get a lot of rain, but
Yeah, well, yeah, in Idaho we get drastically different weather, though we get very little rain as well. I think
yeah.
you've gotten more rain this year than we have.
Yeah, I think we've
As
gotten
crazy as
more
that
rain
sounds.
than most people have. It seems like this year it's rained. Yeah, I was talking with Jason, who's in Texas, our CEO, and the amount of rain that they've gotten doesn't seem to be. We ought to look it up and actually see, if it's
Mm.
just our bias or if it's factual. But we have gotten uh, a lot of rain this year. But anyway,
A lot of
that's not
flooding
why
down
we.
there.
It's true.
But, Lake Mead still keeps dropping
Yeah,
from
it
what I can
does.
see.
It does.
I probably watch way too many of videos about, things being uncovered
Yeah,
at Lake Mead.
yeah,
It's really kind of interesting, but
yeah,
as the water gets lower, people are finding cars and boats and all sorts of stuff down there. It's kind of
yeah.
cool. But today, on our podcast today, I was thinking, I wanted to ask you and kind of give you a scenario here, and you can tell me if it's common and um, and kind of how we deal with it. But the
Sure.
scenario is this. So I this I in my mind, this would be kind of everyone's dream is they start a company and they run it for 10 years and someone approaches them to sell it, right? And so they've been doing business for, a decade, and they go to sell it, and of course there's the whole due diligence process. And throughout this due diligence process, um, you know, the buyer uncovers a large sales tax liability. I mean, it could be $1, $2 million, right?
Yeah,
And so now, when they're hoping to make, you know, I don't know how much they're trying to sell the company for, but they like 10 million bucks. Like all of a sudden, it's a major hit, right?
yeah,
It's like, oh,
yeah,
it's not as much as they're expecting. And now
yeah,
they got to deal with this, and
yeah,
they wouldn't know what to do at that point.
yeah.
Is that something that you commonly see?
In the last couple of years, I would say the merger and acquisition market has been pretty hot. There've been a lot of mergers and acquisitions. Obviously at Pizer Johnson, we help companies with specific sales tax needs, and through an M&A process, you know, buyers are looking specifically at that exactly. And so it is fairly common. I've had a couple of instances just recently, actually, that come to mind where companies have come to us, and whether or not they were trying to sell right now or being acquired right now or looking to be acquired in a few years down the road eventually, just wanting to make certain that everything is buttoned up and that they're, in compliance. Um, when it comes to your sales tax obligation, it's a big deal because as you are making sales, I'll give you one example. Let's just, if I were to jump into a specific example, it would be with a recent client that's um, headquartered here in St. George. We got a referral from a local CPA firm. As most of our listeners know, we partner with a lot of CPA firms to handle and help with sales tax needs for their clients. It was a referral from this company. They're registered in Utah. The owners are here in Utah, and they sell exercise equipment. Specifically, not like your traditional like weightlifting equipment, but more like um, neck rollers, bands, elastic bands, jump ropes, just the kind of the basic, more cheaper end, not treadmills or stationary bikes, that type of thing. Anyway, they're registered in Utah, and they have obviously a Utah taxpayer number, and they're filing Utah sales tax based, and they're collecting Utah sales tax based off of sales to Utah customers, but that's it. And like a lot of companies, they experienced a big growth, and they saw a lot of growth over the last 2 years, 3 years, in sales across the entire U.S. And so now they're trying to figure out what exactly do we do. And so they sent me over their sales from 2020, and we walked through it, and we discussed specifically, what that obligation looks like and how to help mitigate it. Granted, it was only 1 year, and they've been in business for many years now. We identified where they had a tax obligation in a lot of states, and where they had established nexus, first and foremost, because that's where we start, where you had established nexus, and now you have this obligation to collect tax, but you haven't been collecting the tax. And so how do you go about that? There's another classic example that Andy shared. I still remember early on, he and Jerry were helping this pool company that was being audited, and they were going to be put out of business because they weren't collecting tax on the services. Most people know services aren't subject to tax unless they're specifically enumerated in the legislation, and just so happened that professional cleaning services were taxable. Pool cleaning services, what he was doing, this individual was doing. And so whether you're being acquired or you're being audited, there are some serious sales tax obligations that you ought to look at when it comes to moving on and being in compliance. One of the things that companies often overlook is the fact that they're doing business outside of their home state. Now with the economic nexus legislation, they have this obligation in multiple states, but they're not addressing it. They're not getting registered. They're not collecting the tax. So how do we handle that? How do we go about that? And we help companies in this specific space every single day mitigate that to the best of their abilities.
So when someone is performing this due diligence and they uncover this obligation, I'm thinking about we talk a lot about this being the year 2022 being the year of the sales tax audit, right? And we've seen that, and more and more states are looking to pad their revenue by more sales tax audits. And but at the same time, that's just one state, or it could be one jurisdiction, or you could have a couple of states auditing at the same time. But when you have someone looking to acquire your business, they're not looking at just one state. They're looking at all of them. And so that's even more to mitigate. So it sounds like the time to look at it, if you're planning on having a nice exit from your business and you want to retire in the next 5 to 10 years, even, it's smart to get that looked at.
It's funny that you mention that, because when you're getting acquired, you're looking at all the states, right? As if the states all came and audited you. But that's one of the things we talk about a lot is, as you're trying to get compliant, it's almost impossible that every state is going to audit you in the next 3 years, 4 years.
Right.
Now, if you're a large company, you're the Microsofts of the world, the Amazons of the world, sure, you could be audited by every state in a short period of time. But most, medium to large size businesses are not being audited by every state. And those medium to large size businesses likely have got things figured out. But if they don't, then yeah, you could have some obligation. But for most small to medium sized businesses, they don't really have that risk of being audited everywhere. And so
Right.
typically they'll just look at the top, maybe top 3 or top 5 states, depending on how material it is to them. We've even helped some small businesses who have had, 6-figure tax obligation for, 3-4 years in arrears that they need to address. And they've simply, now we're going to start collecting tax today. We're going to get registered and we're going to do it compliant, or we're going to be compliant going forward. And they just kind of roll the dice. And as a business owner, you can take on that risk, right? I mean, you can say, if California wants to come audit me and assess this 6-figure liability, $100,000, $200,000, $300,000, $400,000 in tax, then okay, I'll deal with it then. But I don't think that that's what would happen. And so we walk through that. Okay, here's the pros, here's the cons, here's what legally you should do, and here's what we would encourage you to do. And then we just work with each of those companies to help mitigate their tax obligation and then defend them or help defend them under audit if they do get audited.
Yeah. So when it comes to a merger and acquisition, is there some negotiations that we help, in between? Like, do we help negotiate? It's like we get in there and we can help kind of mitigate the potential exposure, but do we give like some negotiation advice of here's what you can say and here's kind of the real risk? And
yeah, I mean, oftentimes through a merger and acquisition, the acquiring company will hire a firm, whether it be ours or somebody else, a third party, to do a due diligence, right, and to determine what the tax obligation is. And then what ends up happening, what has happened several times, is that the company will reach out to us, hey, I need you to do your own due diligence on us and figure out how to help mitigate this. And then we'll do our own due diligence. Here's where you've established nexus, and we'll we'll estimate or calculate the amount of tax that's due based on when you establish nexus. And then we'll walk through that with them specifically. Oftentimes, there's not much mitigation that can happen. I mean, the facts are the facts. You should have collected tax 3 years ago. You never did. Here's how much tax that we estimate should have been collected. And depending on how detailed the data is, we can calculate that pretty accurately. Now, what do you want to do about it? You can obviously submit a voluntary disclosure and you can come clean. You can pay all that tax, get a waiver of the penalty, potentially the interest, depending on the state. You can wait to see if an amnesty program rolls out with any given state. Maybe through an amnesty, they're willing to waive penalty and interest and limit the look back. I mean, different states will come out with different things. You can, start dealing with the tax now. Yeah, I should have collected it, and you can start remitting that tax over time as you have the income to remit the tax on current returns. And maybe that will help in a mitigation process. Yeah, we were aware of the tax liability 4 years ago, and from that point, we've calculated there's how much tax we should have collected, and so we've been remitting that tax. And so through a merger and acquisition, to your point, you can maybe mitigate that a little bit or argue. We're trying to get into compliance, but unless it, and that's the other thing, is that people oftentimes think that it will just go away. Well, with time, it'll be so old it'll go away. And the truth is that there's no statute of limitations for a tax return that's been unfiled or sales tax that's been unpaid, that hasn't gone remitted. The statute of limitations doesn't apply to it. Now, the statute of limitations applies if you filed a return and remitted the tax, and that's what the states will typically audit, is what's in the statute of limitations, what's been the last 4 years of filings and payments. And so that's what we call the statute of limitations clock. It starts that clock when you get registered and filing returns, that the states typically will stay in that period. So you get registered back in 2020, and you don't get audited until, let's say, 2027. Well, you've been filing and remitting returns for 7 years. The state's only able to audit what's in that statute of limitations, not what's before that. Unless you raise your hand and you indicate, hey, yeah, I got registered in 2020, but I've been doing business since 2018 when the economic nexus legislation came out. I mean, it's just unlikely that that happens, and it's very, very rare, if at all, that we've seen it in the sales tax practice from auditors that dig into it. Now, it certainly can happen, and I'm sure that there are stories out there from other professionals,
right,
that they've dug up, right? But
so, have we worked with a number of our clients? Like, do they reach out to us and say, "Hey, I'm looking to acquire this business. Could you do some due diligence?"
Yeah.
Yeah.
Yeah, no, we do assist and help with that, and we have. The other thing that, aside from these things that we've talked about, the other aspect of the due diligence is companies oftentimes forget that, they're the successor of liability, but they're also the successor of the assets. So maybe they've purchased fixed assets, or they've expanded a new footprint, or they've just been paying sales tax on regular expenses that they shouldn't have been. So you can pursue refunds of overpayments of tax on those items over the last, whatever the statute of limitations allows. Whenever that tax was remitted, 4 years later or 3 years since then. So they're also the successor of any potential refunds that are due to them. So it's another area in which companies will reach out that will help and that will assist identifying and then pursuing those refunds. Obviously, the company maybe has been acquired by X company, but you can still go get those refunds through the state or through vendors or whatever the case may be.
If you ask me, this is like the sexy side of sales tax. This is probably the most sexy.
It's true, but I'm surprised at the number of concerns that people have in obtaining refunds. And legitimately, you overpaid tax, so you shouldn't be concerned. Well, right. I am concerned because if I request a refund, they're going to look into it deeper. Okay. Well, here's the facts. Here's why the tax wasn't due. We present that, and we'll see what else follows. Some people are concerned with how it looks to their boss. Man, I've been paying tax over the last several years, and I shouldn't have been. Why did we overpay all that tax? Well, we did. And you see it all the time. People just take a conservative approach, and we don't fault them for it. But you definitely ought to be reviewing that and identifying processes and things to correct it.
Well, I think that's important. I mean, there's got to be just a mindset change. But one last question that I'm really
with questions today.
I'm genuinely interested in this. I mean, this is sexy.
I like it.
Sexy. Anyways, do we work with brokers or I know there's these groups of people who, there's people that they represent a group of investors, right? Buying companies. I mean, do we partner with those type of people?
That's a Danny question. I don't know if we actually partner with them. I have worked just recently. Man, that's weird that you asked that question. No, this wasn't pre-planned. Just recently, I was working with this company who is part of this venture capital group, right? So there's 14, 15 companies.
Right.
But yeah, same ordeal. Everybody who is buying and selling tangible personal property or services has to deal with sales tax in one way or another. It's just the bottom line. Right. And so it doesn't matter who you are. I mean, we can definitely assist and help. And you may not have an obligation, and that's fine. That's good. It's great. It makes your life a little bit easier because, it's on somebody else's plate or somebody else's shoulders, or you got the proper documentation in place to support why tax is not due. But yeah, everybody who's buying and selling things, even the venture capital groups, even the other companies that have sister companies or related companies definitely have something to be concerned about. Oh, Par, Jason, our CEO, he is saying, is sales tax keeping you up at night? No? Well, maybe it should be.
Maybe it should be.
You
Yeah.
got to think about that.
Yeah, no doubt. Well, Paul, thank you so much.
Sure.
This kind of stuff is really interesting to me.
Of course.
But yeah, like Paul said, if your company is buying and selling stuff, or you're thinking about buying a company that buys and sells stuff, you need a nexus/risk analysis done, and it's something we can chat about to you, and sometimes it only takes a phone call, and we can say, yeah, there's nothing much here, or yeah, we really need to do this. So let's dive deeper into it. And that conversation could, it's only like a 30 to 40 minute conversation, and we can gather enough information to give you a solid answer and know exactly what direction to take. And so don't hesitate. And no matter if you're a CPA, venture capitalist group, business owner, whoever, we'll talk to you. All right. Thank you so much, and we hope to talk to you on another one.
Thanks, Ryan.